Thank you to Strategic Law Partners for sponsoring this podcast. Strategic Law Partners was formed to provide the highest quality, common sense legal services at reasonable rates. Over its 25-year history in Los Angeles, Strategic Law Partners has represented many of the top local venture-backed companies, leading early-stage and late-stage investors, PE firms, and more. SLP Ventures has invested in over 75 companies, mostly in the Los Angeles area. Thank you to Brad and team. Hello, and welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at 10110. 10110 is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Buck Jordan is the co-founder and managing partner at Wavemaker Labs. Wavemaker Labs incubates disruptive tech companies in partnership with corporate partners. They have a particular focus now on food and robotics, and I'm definitely going to ask Buck more about his experience as founder of Miso Robotics. And he's also a partner at Wavemaker. Buck, thanks for coming on the podcast today.
Yeah, thanks for having me.
Did I get the introduction correct?
You got it right. Yeah, we are innovating at the intersection of food and robotics. For a bunch of reasons, which I'm sure we'll cover later.
Right. I think I kind of called it food and robotics, which sound like they might be separate, but it's really the intersection there.
Yep.
So something like Miso Robotics, where there's a robot flipping my hamburger patties over.
Yeah, we believe that the future of food is changing pretty dramatically, and it couldn't change before essentially the past couple of years because the price of robotics has been dropping to the floor. You can now buy for like $8,000 landed in the U.S. at volume of 1. You can buy a 6-axis degree of freedom arm, and then for like $200 you can buy an Intel RealSense camera and tell an apple from an orange from a pear, and volumetric data so you can grab things. So now all of a sudden, really only in the past couple of years, the entire problem of automating low-cost labor is relegated to more of a software problem and less of an expensive hardware problem. Something
like a robotic arm is, how much does it cost?
Well, I'll give you like a timeline rough, so like 2015, a robotic arm might have cost, like a kind of a 6-axis robotic arm that's kind of like the size of a human robotic arm, give or take, would have cost, somewhere between like $60,000 to $100,000. Before then, even larger, right? When Miso started in 2016, they were kind of running in the 40s, give or take. And then now, like I said, like there's $8,000 robotic arms at volume of 1. So like not even like volume pricing, landed in the US. Including shipping. Yeah. So.
Got it. And so, and a 6-axis is what my arm does? No.
Well, I guess 1, 2. Yeah. It just means a very articulate arm. It means I can twist and turn in 6 different ways.
Got it. So you can just program that with software to do whatever you want.
Yeah, pretty much. Like, pick fruit, prepare food, cook anything, dispense anything, so it's really really like when you work with robotic arms, you have the ability you're mimicking how a human arm moves, not necessarily how to do a specific object. Like, so people look at Miso and then they look at Creator. Creator is this really cool company in NorCal. They basically got something the size of a mainframe that prints burgers, and so Creator has taken this mechanical solution of like, it makes a hell of a burger, like kind of umami style burger. Those of you who've been to that restaurant, but don't ask it to make a chicken burger. Don't ask it to deep fry fries. Don't ask it to make salad. But Miso is a really flexible approach because we're really mimicking how a human arm moves because we use robotic arms. And so the same piece of hardware can make a burger, can deep fry fries, can do prep, can do packaging, can do a whole host of things.
So I find it super inspiring, super cool that I could just buy a 6-axis robotic arm for $8,000. But tell me more about why the intersection with food is particularly interesting to you.
Well, because the best investments I think come from the really hard problems, and I think that there's not a bigger problem right now or an industry that's more under siege than the food industry. Forget about COVID for a second. Like even before this industry was scraping by on single-digit EBITDA multiples. Restaurants fail faster and more often than startups, right? So this is an industry that's under massive strain from all areas. Like there's rising labor costs, there's rising food costs, real estate costs is going crazy. Delivery is, introducing a whole new set of challenges. And most of those problems that I mentioned are really well served by automation. And then once you automate, that just kind of takes away the pain, but how do you elevate everything? I mean, if you can automate, all of a sudden the level of quality that you can reach can be so much higher, as well as, the speed of service and, consistency. You can do things like, adjust cook times based on the thickness of the meat and the heat at that particular point on the grill, because every grill has different heat and hot and cold points. It's really frustrating. And you can do things like coordinate all the food that's happening in the kitchen.
It's all very Jetsons. And so with Wavemaker Labs, what I said at the beginning, which is you're doing this in partnership with corporate partners. And so who are the typical corporate partners, and how does that work when you're starting these new endeavors?
Yeah, I mean, by and large, the corporations who are really, well, it's all over the map, because we've chosen to focus in robotics and food, because for a couple of reasons. One, robotics is a highly specialized skill set that almost no corporation that's just generally in short supply in the world. But certainly the kind of corporations that we're talking to, people who run large food organizations, they have no business and no ability to possibly have this kind of capability. So we bring a really unique skill set to an industry that doesn't have any access to this skill set for the most part. And so the reason why we do this is because we're not incredible idea fairies. What we're really good at doing. I mean, I wish, right? Like, what we're really good at doing, and what's repeatable, more importantly, is that we can understand problems from corporations. And because we've got a really incredibly deep bench when it comes to technology and robotics, we can generally solve most of their problems through automation. And then we basically will go build it. We make sure that they supply a large letter of intent, so that when we have completed it, they buy it. But like, for instance, we had a $50 million 50 LOI for our pizza concepts, which is called Paistro. Please invest. And that was from a store that had a pizza joint that had about 700 locations.
So you've got like a $50 million LOI from someone who says, if you make these pizza vending machines, I'll put them all over the place.
Yeah. And just imagine, like, just being a regular startup, like, imagine, okay, like, I think people are interested in these pizza vending machines. I've got zero proof. And when I go pitch another investor, well, they've got to kind of take my word for it. And because of that, it's got to be a really low valuation because of a lot of risk, But what if you could start a company before you've written even a single line of code, and you start out with a $50 million LOI and super strong, conviction that you're tackling a problem that actually matters.
Mm-hmm. Yeah, and I've sometimes called those like development customers or something in the early stages, where they're also hopefully, they're in it with you, and so they're giving you feedback.
Exactly. How many companies have you invested in where they go 6 months down a rabbit hole of R&D that is totally not applicable to the customer? Like, probably like all of them is my guess.
Okay, I try to help my companies avoid that.
Yeah, it's just, but it's really hard, because like, you got conviction, but you don't really have access to like a big customer who can truly tell you what's going on. So we make sure they're involved on at least a monthly basis with our product development.
Well, I mean, it makes total sense. And I'm super interested in hearing more about Miso's journey. But also, on the flip side, sometimes we talk about strategic investors coming in. And I think maybe it's particularly in the later rounds where it can be more mixed.
You're bringing up a point, like how do we at Wavemaker Labs like engage, a company that does $100 million of revenue a year, we're engaged with one, for instance, right? How the hell do you engage with them at like a super early incubation stage? Because those guys are Series D investors, if they're investors at all, and it's all about the approach. It's like it's very much like a partnership approach. If you make them feel like, no, you're the founders too, and you're going to own a big piece of this company, and if you, by nature of your just incredible customer weight or market reach, can king make this company, then you're going to win too, and so that's sort of how you get like get someone who's really slow, stodgy, super late stage investor, if investor at all, into doing, ground up incubation in some crazy robotics shop.
So they get to feel like a founder.
Yep.
Interesting. And I guess why not sort of do it themselves?
Well, so a couple of things. I mean, because Wavemaker Labs is really highly specialized. I mean, we've got our CTO, Martin Buehler, is first of all, he's so good. I don't know what he's doing with us, but he's really, really good. So he was director of robotics at Boston Dynamics for 5 years, built the walking dog from paper to walking dog. This guy's been like number one, number two engineer at any robotics company that's mattered in history, in my opinion. And so, and our team's about 22 engineers. Like, they just don't have this kind of talent. And they also don't have the kind of talent to really innovate internally, because these corporations, they don't have the equity structure. They don't have the incentives. We'll create the company. We'll find a CEO. We'll get it capitalized. We'll get the next round capitalized. And they just don't have those skill sets internally.
And how do you make them feel like a founder as opposed to just a funder?
Well, we make them come up with the idea, and we give them founders shares. It's really a joint venture. And so, typically we'll start off with a discovery phase where we will really spend, like, I want to say it's 4 to 6 weeks digging into their business. And, we want to solve problems that are really important to them, so we have their attention. And so we really kind of like pull the answers from them over the course of time. And so we make them think that it's their idea.
What have you learned about corporate innovation in the course of you doing this?
So one, like, I speak to a lot of corporate innovation groups, and whenever I get into a group that is like the innovation group, I always know my job's gonna be a lot harder. Because the reason why is because, like, I think that it's incredibly challenging to make any progress that's like, seriously revolutionary or innovative when you're inside a corporation and you have to deal with that structure.
Did this come out of Miso Robotics, or you were doing this, or just give me a fuller view of you and how you got here?
Yeah, I mean, so I prior to joining Wavemaker, I founded my own venture fund called Canyon Creek Capital. We deployed about $30 million.
Wait. Let me just stop you on that. When I looked at your LinkedIn, it kind of looked like you went from business school to starting your own fund.
I did. Nobody would hire me.
Who does that?
Yeah, I mean, it was a really fun journey. So, like, I came out of business school around 2011, and I just come off of starting a fintech company, and successfully started it without funding, and then wound it up without funding because it was based on a government program. Started looking around. Like, I started realizing, well, I would like to make a couple of, like, just seed investments, just personally as an angel. And I didn't like what was happening at Tech Coast Angels. I thought that was pretty poor. And I didn't like any of the angel groups.
Yeah. Why did you not like the angel groups?
Well, I mean, so I didn't like it particularly because there's a lot of voices in the room, and I think that a startup that is looking to get funded, doesn't want to talk to 10 people, giving it, putting in ranges of, like, $15,000 to $50,000. They don't want to talk to all those people. They'd much prefer to talk to 10110 or Wavemaker or a professional venture firm. And so I felt that, like, that, because, like, I think venture is all about adverse selection. The best group of companies, like, they go initially to institutional venture capital, and then they go to strategic angels or large super angels. Then they go to, like, individual angels. Then they end up at, like, angel groups. And so, like, the best companies are being cherry picked all along the way. And so by the time they finally end up at an angel group, everyone in town should have passed on them by that point, because nobody wants to go through the hassle of dealing with 10,000 investors. It's just really challenging if you have to have a personal relationship with them, which you don't with other crowdfunding, for instance.
Okay. I mean, here's the thing. I agree with you, and yet I would like, I want a vibrant angel ecosystem. So,
for sure.
So I'm curious on what you did. I interrupted. Right. Go on.
Well, so I, before I started the fund, I tried to start a different version of an angel group, where really, it's highly curated. Essentially, like, I would vet them. or vet the companies myself, and everyone would invest behind an LLC. And I wasn't charging any management fee or carried interest or anything. And so it was a much more streamlined process for startups, and I felt like wasn't so subject to the adverse selection problem. Well, I did one deal, and I quickly realized, geez, that was a ton of work to not get paid for. And then so I went back to my group of investors, which is like literally just friends like chipping in like $5,000 or $10,000. Like there's no whale in this story, and then just started applying a little bit of management fee and some carried interest. So we started out as a pledge fund, and quickly deployed about $6 million across 11 deals. And was lucky enough to get 3 really quick exits. Sold an ad tech company for basically kind of get your money back. Sold Blue Bottle to Nestle, and then sold a company called Gyft, GYFT, it's a mobile wallet for gift cards, to First Data.
Okay, that's extremely impressive. Like I don't want every MBA to go and think that they can just do this necessarily. But wait, tell me about, just for our listeners, can you explain like pledge fund versus like an SPV or a rolling fund or all the other terms that we hear?
Yeah, I mean, pledge fund is really just a group of people who are willing to potentially invest in your deals. And if there's and if they do a deal, it's basically like an SPV. Then there is some management structure on it, but it's a hell of a lot easier for early investors to start their career. Because like when you start, you have no track record. And so I didn't have a track record either. And so I just started essentially like selling the deal.
Yeah.
I was like, here's a specific deal, and here's how it could work, and here's my analysis of it, and yada yada yada. And that you can get behind, but
and that's different than an SPV, or is it the same essentially?
Basically the same thing.
And would you recommend to people who want to be doing some of this to start up their SPVs themselves?
Absolutely. I mean, it's there are some nice tools out there, like, doing this through AngelList is pretty good. AngelList will take 25% of your carry.
Mm-hmm.
But it's a real easy way to do it.
Okay, so that was out of business school, what we're talking about, this amazing $6 million that had Blue Bottle and Gyft and everything else in it.
Yeah, that's right.
Good for you. And then I'm not sure I'm going in order here, but then what happened next?
Well, so I sold Gyft, and so sent a bunch of money back to my investors. And so at that point I decided to raise a committed fund, because always ask for money from your investors when you've just given it to them, because they have it. And then,
right.
Right after an exit, because they love you for that moment, but they might not love you in 6 months. So Canyon Creek as a committed fund was about $10 million, but I kept up my my pledge fund activities, and so ended up deploying $20 million alongside of the 10 that I deployed out of committed funds. So what's more impactful? And I think pledge fund, SPVs can certainly be more impactful than a regular committed fund.
Right, because you get the carry on if you have one deal that knocks it out of the park.
That's right.
Yeah.
Winners are winners.
Winners are winners. Good. Awesome. Okay. So what did you do next?
Yeah. So lost my mind, decided to go back into startup world a little bit.
Right.
I mean, not exactly. So with the last check out of the committed fund at Canyon Creek Capital, I decided to try something different, and I was just, let's incubate something, So I was looking around for something to do.
Why? Now that I've been a founder and been a VC, why did you decide you wanted to incubate something?
I've been asking myself that for a long time.
It's harder, right?
It's so hard. And then what I'm doing at Wavemaker Labs is like incubating 10 companies. So it's like 10 times harder. But by the time, I thought it was easy. It was, starting companies is not easy. Investing, I think, is a hell of a lot easier. Because like when I was kind of just looking back and reflecting on, what happened in Canyon Creek and what went well, what didn't, all that stuff, and what type of companies performed well. I looked at Miso, and Miso, we incubated it, so super low cost basis, it raised about $15 million. Like the last round at this time, is a couple years ago, it was at $10 million on a $40 million post, and And at that point, I was basically almost exactly at a 10x. And typically, if you're a seed investor and someone tells you that you're at a 10x return, you should kind of like mentally think, well, that company is probably now like an 80 or 150 million dollar company, depending on a whole bunch of factors, right? But I was at 40, and so I was like, well, geez, it's kind of a magic number because something like 86% of all exits happen at $35 million or below. And yet, like, almost all of us are chasing these 10x plus $100 million unicorn, God forbid, companies, right? This tiny super long tail. And so I thought, well, geez, if there's a way to incubate at scale, then I don't need to sell these companies for $100 million. I can sell these companies for 20, 30, 40 and be super wildly happy.
Mm-hmm.
So I've been trying to recreate that ever since.
Well, I mean, we all just are watching Snowflake and just the amazing, it's not just their performance, but it's also the amazing amount of ownership that, is it Summit Partners who incubated them? Yep. And so just looking at the ownership percent does make it tempting to go start more companies so you can own more.
Yeah. And if you choose your corporate partners correctly, you're probably building right towards an acquirer who, doesn't have any diligence to do on you because he's calling you every month.
What has changed about your approach to incubation? What have you learned?
A lot of the same lessons you learn as an investor. It's all about the founder and the people. And we also have a pretty unique approach to financing. We don't go to traditional venture at all. We embrace crowdfunding almost exclusively.
Okay, so tell me about the space of equity crowdfunding and just give me sort of the 101, the really basic view.
Yeah, so with equity crowdfunding, essentially you're selling shares online. You're allowed to advertise, which is huge. It's really just you've got to have a compelling pitch. It's a much more involved sale than a typical e-commerce thing. I'm not like you might buy a shirt based on one advertisement, but if you but for equity crowdfunding, typically like you've got to capture them with advertisement. And then you've got to continually tell them a story over several months of your campaign, and then they'll hopefully invest. And there's sort of like a reverse bell curve of like if you're running a campaign for like 6 months, you get a bunch in the beginning. It's kind of like the curve goes down into like kind of not a whole lot in the middle, and then like half your money you raise the very last month. So it's super nerve-wracking. You never know if you're actually getting anywhere until the very end.
What would be like a typical, the person is raising a couple million, or one of your companies is raising a couple million, or how much are they raising and what size checks are they getting, and just how does it all work?
Yeah, so Miso, for instance, is raising $30 million on an $80 million pre. We're at about $7 million. Typical check size is like $2,000. But there are people who are writing, so one of our other companies called Graze, it's a commercial autonomous lawnmower. It's just closed on $4 million, all crowdfunding. One investor put in $250,000 without even speaking to us. So it's mostly the small checks, single digit thousands. But there's also really big dollars out there to be gotten.
So you're raising 30 million on an 80 pre, on a crowdfunding platform.
That's right,
Gosh,
Seed Invest.
I just think of it as smaller dollar stuff. Okay, so Seed Invest, tell me about equity crowdfunding is different than sort of a traditional, like a Kickstarter. Is that true?
Yeah, I mean, you're just getting shares instead of a product.
Okay, but why? What are the misconceptions about equity crowdfunding? Why doesn't everyone? Because I had the misconception that you were raising like $1 million.
No. I mean, we're raising like $100,000 a day, if that makes it gives you an idea of the scale. And I mean, think about it for a second. So the entire venture world is like, I'm oversimplifying here, but LA, New York, and SF, right? Mostly SF in terms of volume of dollars. And I would say that I would wager that technology and startups are like one of the most the public is fascinated by it, and venture capital is the highest return asset class, but the general public has no access whatsoever to it. So it's sort of a rich get richer story. But like, you tell me, like there are people in Ohio who want to put $1,000 into Miso Robotics. There are people in Europe, in Asia. Like I'm running a global fundraise. Like if if you're a traditional venture fund or sorry, startup company in LA, like you're going to go do the circuit, you're going to find Wavemaker, you're going to do 10-1-10, you're going to meet all the people in town.
And how do I know it won't be sort of an adverse selection, kind of like what you were talking about with raising from an angel group? Like if I'm the investor, how do I know I'm not the sucker at the poker table if I'm putting in my $2,000?
I mean, you just have to make your own judgment. And everyone in town, and every venture investor, and every like professional investor, like you say the word crowdfunding, they immediately like wrinkle their nose, like, "Oh, really? Are you going to get funded by anybody else?" But that's not the case at all. I mean, like, first of all, like it's possible for a startup to succeed without the massive brain that is in the VC fund. Sorry, not to poke fun, but I'm poking fun of myself. So but the reason why there's this like mischaracterization or just like disdain for equity crowdfunding is because every VC kind of got burned. So the Jobs Act was passed in 2012, and a bunch of investors, including myself, invested in crowdfunding startups or something in or around that space. They all failed because the SEC took 4 years until mid 2016 to actually approve the Jobs Act, right? And then after 4 years of all this hype about equity crowdfunding, every VC looks at the crowdfunding kind of market in mid 16 and says, "Oh, see, like a drop in a bucket." There was like no volume because it's a brand new market, And so everyone just took their eyes off it. But meanwhile, in the past couple of years, there's been 10, 20, 50. There's even been a single $100 million round get done through equity crowdfunding. So this is really, I think, a revolution, and I don't think people should be discounting it. But it is very hard to do.
And is Seed Invest, how do I know which are the good ones, and why? I'm just going to go back to Kickstarter or Indiegogo. Yeah. Why are they still, if I understand correctly, set up to be funding in exchange for a product as opposed to for equity?
I mean, just because I think that there's different markets for different people. I think people really want alternative assets to be part of their right. future, and their finances, and equity crowdfunding is the only avenue into the early stage venture world to get access to those kind of returns.
Great. And any other tips for doing it well?
We've learned by failing here at Wavemaker, but now we're really, really good. Like we're launching 4 more crowdfunding campaigns, before the end of the year, probably. You've got to plan everything out. You've got to plan updates out for like your entire 6-month period. Like every week you have a new update to go talk to because you're building an audience and you're cultivating that audience and you're convincing them to invest, and you're talking about like the opportunity. And so it's not as simple as buying an advertisement on Facebook and having them click and then boom, you got an investor. It's like, you've got to really work at it. So I think that it's prudent to find people who've done this before and have them manage your campaign. Wavemaker actually is starting to manage third-party campaigns of people who we know just because we're good at it and it's scalable for us. But I think
you're like an influencer. Are you like, it's like a social media, like you're going to build up your followers or something?
A little bit, yeah. And then we've also on that point we've also embraced crowdfunding because we're in a unique position to take advantage of it because we're a holding company structure that has many portfolio companies underneath it. And so anytime any one of our portfolio companies raises capital, and they have Graze has almost 3,000 investors, for instance. Graze is our lawnmower company. Those 3,000 investors are now in the Wavemaker ecosystem, and we will market them. Misa Robotics, for instance. And so we're actually capturing a high percentage of the investors who actually invest on Seed Invest and Start Engine and all the platforms. And it's pretty interesting because now we get to remarket to each of them.
Yeah, no, it makes a ton of sense. Fascinating. Well, I want to save a little time to ask you random personal questions. Anything else I really need to hit from Wavemaker? From Wavemaker Labs?
No, other than if you want to, build cool products in robotics and food, give us a call.
Do you care what geography people are in?
We want them to be in LA right now or the Philippines.
Okay, got it. Okay, random personal questions. What motivates you?
Creating new, something that's never been there before. Because we do a ton of wholesale, creating companies from whole cloth. And it's so fun to do that especially when you know that it's going to make an impact on a customer who's sitting right next to you. And so creating value is super fun. I love creating I'm fascinated with robots, and I like creating other platforms. So when I say that, I mean, we're looking to create Wavemaker labs in different verticals and industries and even geographies. And now we're trying to copy and paste ourselves all over the world to really give ourselves this global perspective and global innovation.
That's great. Do you have robotic arms in your house?
No, I wish. I've got no technical ability of my own. But
I would have thought that maybe you just had robotic arms serving you breakfast or something.
Well, I mean, that is a company we've been toying around with starting.
That's fantastic. Well, I look forward to seeing the future that you're going to build, Buck. It's really been fun to chat with you.
Great. Likewise. Thank you.